Hey, everybody. Welcome to another Bootleg Weekly episode. I am the reason we are late today. I got home 10 minutes ago and I ordered food and I just picked it up and I haven't had a chance to eat it yet because I'm going to be here for the next hour and a half. So it's going to be a late dinner. What's up, Roy?
I was thinking we just have a 5-minute episode and then you can have an early dinner.
Or I could just eat on the episode and I can subject all our fine viewers to that.
I figure we can cover Tesla earnings and Tesla news, Google earnings from last week, upcoming PayPal, SoFi, Robinhood, Amazon, and Microsoft, as well as macro news in 5 minutes, right?
Yeah, you start.
All right, so pretty much by the dip. No, just I mean there's a lot to cover, and we are back in the thick of earnings season. So I guess let's start there, Tevis. We can look at like last week. I know that there's some Tesla news and Tesla earnings as well, and of course it came out after our previous Bootleg Weekly. So I think we should cover that. And then maybe look forward towards either macro or earnings that's coming up. So, and you can not eat; it's not allowed.
They're saying I should eat here. I will consider it when I'm starving in about half an hour from now because I haven't eaten all day.
Yeah. Maybe we'll let you eat after the introduction. We'll cover Tesla, and you and Tanner, of course, cover Tesla live. You're going to cover tomorrow SoFi's earnings live. I'm stuck between PayPal and SoFi, and I can make neither because Tuesday mornings are the worst possible time, and both PayPal and SoFi are like, hey, let's do this on Roy's worst possible time. No, it's not because of that, but
yeah.
So with Tesla, they had close to a 40% miss on EPS. They missed almost by double digits on revenue as well. What do you think, Tevis?
Yeah, I sold my Tesla. Sorry, my TSLL leaps. So, I mean, that was a wild ride, but I think Tesla was at like 284 or something yesterday, and I just let them go because I said, you know what? If this thing turns on me again, I don't want to be there for that. And booked a nice, I think, like 50% profit, something to that effect. Dude, I had like, and this is where I get greedy because I think it was like 80% profit in 3 days. And I said I should just close it, but I wanted to round it off at 100 because I'm an idiot. And then it went down for like 2 weeks. And it went down. It was like basically flat on my leaps because I bought them so cheap. But now that it rallied again, which is insane, the fact that this company just misses and rallies. I think we had a big rally in the after hours because Elon said he was stepping away from Doge starting in June, I believe. He said it's not going to be as big of a time commitment. But I'm still holding my Tesla stock, unlike like Jeremy, for example, who I know made some headlines in the YouTube world for letting go of those shares that he's been holding for years. I haven't quite seen why Jeremy sold, so I'm not going to speculate. But I just let go of the risk of the DSLL leaps because I don't know what Trump's going to do next, man. Like I don't want to be holding, and I think I have it in cash. I didn't even buy anything with that. So yeah.
Like one of those things. I think it's a good reminder for people too that we're in earnings season, and this you didn't make for an earnings play because you bought leaps. They were long term. Sometimes things just work out, but I predicted, and I was right. I didn't put like numbers on it or anything. That it'd be a pretty dismal earnings, and you and I talked about it too. And you went in with us holding them, probably just hoping, but not really expecting that we'd get much of a ride. And when you saw the numbers, you're like, oh man, these are going to get crushed. And if you're making earnings plays specifically, you can get everything right as far as like nail the revenue perfectly and EPS and the guidance and everything. And you can't necessarily, you also have to get right the market reaction. And
Yeah.
that's the tough thing. That's one of the reasons why I really don't play earnings unless it's just a very, very small amount. That's my degeneracy there. And this, other than just selling really outrageous covered calls, I'm not playing or cash secured puts. I'm not playing earnings at all, which is typically what I do. So yeah, I don't blame you at all for like saying, okay, this makes absolutely no sense as far as the price action. I mean, like honestly, I would have expected based on those numbers for Tesla to be trading at like 180 instead of 280 right now, and we're not. So I'm just holding on my position. I'm not buying and adding here. I'm not selling what I have, but I'm glad I took profits in the 400s and 300s for sure.
Yeah, absolutely. I am glad I had some of my shares called away, and I had the same thing with, I forget who I was telling over the weekend with Hims, because I had a whole bunch of shares called away in the mid 40s with Hims, and I felt like the biggest idiot in the world because this thing ran to like 70.
Yeah.
And yeah, and I was able to buy back at like 31 bucks or something like that, and get paid on both sides of that transaction, which is kind of fun. And so the same thing with Tesla, right? Like had a whole bunch of shares called away um, in, I think, the high 300s or so. Um, and so it worked out in that sense. I still have, a whole bunch of shares, but I don't mind holding them. I've been holding the stock for like 5 years. It's kind of a weird spot, Roy, because if I'm telling you the like gut honest truth, if I was closer to selling or closer to buying, like I feel like I'm the most bearish I've been in Tesla in a while, simply because their financials are not showing any sign of improving, and we're only going off of management's promises that they're going to do so. And the reason I haven't sold yet is because management has followed through on those promises multiple times, and they've seen us through the fire with regards to Tesla stock. But at the same time, it's really piling on a lot of pressure on that robotaxi event to go flawlessly. And I do think as a closed test case, it's not going to be any material impact. It's more so going to be like a good signal to the market that we're getting closer. But I mean, the thing that I was saying over the weekend, I met the emit meetup thing. So it was like me, Tanner, and I was talking to a whole bunch of people who own Tesla. And the thing I was telling to them was like, hey, look, it's in the hands of regulators for the most part, because every state has to go through the regulatory approval for this robotaxi. And at the same time, then you have like the regulatory adoption hurdle, and then you have the people adoption hurdle. My mom is never going to step into a robotaxi that has no steering wheel and no pedals. Like, just the mental barrier you have to overcome alone is going to hold off a lot of people. And some people might be like, yeah, sign me up, I'm going to be the first one. But I was also the one to, like, go skydiving and not tell anyone. It's like it depends on how your mental models of the world are. But
Yeah,
I've
the guy
never
buying TSLL leaps is not going to have a problem jumping in with something like that.
Yeah. Yeah, no, and it was highly recommend to everybody. Actually, really crazy story about that, because they make you do like a video confessional of like, this is all of my own accord. If something goes wrong and I die, the so and so place is not liable. And I'm like, like, this is scarier than going up. But okay. So, aside from the point, I think historically I haven't been as bearish on Tesla, because yes, there are initiatives and there's new things on the horizon that they're trying, but from a financial perspective, their numbers were always rising incremental to that, right? They hit profitability in late 2019, early 2020. The stock did like a 10x, and they were like, okay, cool. It's all now a byproduct of how many factories and how quickly can we scale them up, which will yield you the total number of vehicles we produce, which then multiplied by a certain margin will yield you what we will retain as a business. And that was a very simple formula. And I feel as though in the last 6 quarters, that formula has broken, where we've plateaued and we haven't been able to break that plateau. And now it's just management saying, okay, well, here's our second act or our third act, or however you want to see it. And now we have to sort of follow along with the ride. And that's the thing that's making me a little skittish, is I'm expecting management to pull another rabbit out of the hat in terms of, oh my gosh, FSD, robotaxi. And if they do, the risk to reward ratio is going to be there because I'm going to be making a lot of money because the stock is going to jump, 5, 6, 7, 800 plus. But if they don't, then I'm left making excuses for companies whose financials have been dwindling for like 6 quarters and I didn't do anything about it. So.
Yeah. No, I can't argue with that, but I did think that it's worth, just because despite the price action, like that was a very bearish earnings call. A lot of issues with the company as well, but there are some things that are bullish. So, keep this in mind. It's kind of playing the other side of the coin versus what Tevis has said, just because somebody has to be the bull here. And I've not bought Tesla shares. I don't think I've bought Tesla shares this year. I've been happy to just let mine ride, and I even took some off the top. So a couple of things that are going really right. One of those is that the margins actually inflected up X auto credits. So they are manufacturing credits. So this is a really good thing for Tesla as well. They did talk about like the ramp on the several other products as well. Robotaxi is a little bit disappointing with some of the comments regarding that. Can you throw this up, Tevis? All right. So this energy and services are really doing well. This is energy and services as far as another gross profit. And you can see how meaningful that is. This is something that really, when I got into Tesla back in, it would have been late 2022, I was like, okay, yeah, this, even though it had just been negative, I'm like, this is absolutely going to be an incredible model for Tesla, just because they're able to generate a lot of revenue from services as they continue to ramp their manufacturing of the vehicles, as there's more and more Teslas in people's hands, between, of course, the supercharger network, insurance. There's several other products as well that are a little bit smaller, and then energy as well. And this was like way back when it was very new, but you could see where it's heading. And I think you can still see, like, this is not going to be where it peaks out. The auto segment is going to be lumpy, but this is going to be kind of a smooth ride, sometimes going up a little bit slower. It might even pull back just slightly, but the trajectory is very clear and it's in one direction. And this is actually kind of a model somewhat like Apple, where if you're in that ecosystem, you don't really want to go anywhere else in the ecosystem. Few exceptions, but mostly like Tesla has really good products and services. And then energy the storage deployments, those continue to ramp nicely as well. They actually have higher margin as well. That's coming up. That was another really good thing for Tesla. And then outside of actual earnings, this was something that somebody caught that was interesting, a hiring announcement that's had Optimus technician night shift. I don't know if they're quite working on Optimus 24/7, but does this signal anything to you, Tevis, now that you have your mouth full?
I think it signals good things. I mean, this is one that's definitely good. Also, I think we should be paying attention to the signal of the co-founder of Airbnb, the Tesla board member that bought shares today. Like, yes,
Right
exactly.
here. Yeah.
I think that signal as well, because it takes me back to a time when the insiders at Tesla were bullish and buying shares. It is not chicken and rice, it's a Pokeball.
So yeah, this is the first insider buy since 2020 for Tesla. Of course, the price per share was a lot lower then. And there's the old saying of that there's many reasons to sell. There's just one reason to buy. And this was a meaningful buy. It's $1 million worth, a little over $1 million of Tesla at $256 a share. Usually when insiders buy too, it's not just for a quick trade, just because it's a pain to exit those shares. You can't just sell it, when it pumps up 10% or something like that. So it would be very intriguing. Like one buy doesn't mean a whole lot to me in isolation. What'll be more intriguing, like you said, is if there's other insiders that come along and say, you know what, we're going to scoop up shares here at 264, 274, 284, and just continue to buy. So one in isolation doesn't mean a whole lot. Especially at a company like Tesla, where they have a lot of stock-based compensation built into their compensation packages. I don't think there's anything wrong with that, because we've seen the way that they've executed in the past. But in that kind of environment, you're going to see a lot of insider sells, just because that's a lot of their pay package. and not many buys because they're getting all the shares that they want. But this is one of those exceptions where a board member is like, "Hey, I want more." Realist says insiders have been selling billions of dollars at Tesla for years. It wasn't bearish according to permabulls. Now a mere 1 million insider buy is bullish. Again, there's many reasons to sell in any company. Look up any company out there that has a high amount compared to the revenue of stock-based compensation, or if you look at as far as an expense with employees, you're going to see insider sells left and right. You see that with Palantir. Palantir has a lot of stock-based compensation. You see that with Snowflake, where the price action hasn't been good at all. Insiders have dumped that stock. You see that with Amazon. Amazon, especially early on, had a lot of stock-based compensation. They've weaned off of that somewhat, and they tend to as companies mature. There's been a lot of insider sells on that too. Insider sells can mean, hey, that's how they get most of their income, or they're buying a house, or they want to diversify their assets since 90% of their assets are in one stock. There's a lot of reasons to sell, so you can't read too much in it. But how many reasons are there to actually buy the stock, other than just like a little proxy buy where you buy like $10,000 worth of shares, where it's just maybe excite shareholders? People are putting their actual money on the line. So when Anthony Noto buys SoFi, it's meaningful. It's not insignificant. Or when somebody does the first buy here since 2020, or going back to Palantir. Palantir gives out a lot of shares, a lot, especially with the RSUs last quarter. If there's insiders that start buying that stock like at 120, I'll be like, okay, that's very interesting, because it runs counter to the narrative that you would expect in this kind of environment.
Not only that, but like you have to. So exactly, what Roy said. And by the way, paying taxes is one of the biggest reasons people sell stock, is because they're issued stock options that vest at certain periods of time. And so they have to essentially convert those options into shares and then sell those shares to pay off the tax of the capital gains of that delta. The other thing is, man, like, if I want a good life and I want to buy material possessions and live the American dream, I can't do that with stock. Stock in its purest form is not going to buy me a house or a yacht or the amazing life I want to live. I need US dollars or any other form of currency to do that. So the natural route is going to be for you to sell, especially because a lot of the stock that you were granted at a stupidly low, cheap price as options. Number one. Number two, it's a form of your compensation. Your compensation is something that you earn for your time, so that you can then buy other things for like your material possessions. Now, for me to go and flip that equation the other way around, trading my own cash to buy the stock at $260 or whatever, like that is an insane level of bullishness because of the level of risk you're taking on top of all the other shares that you're already issued, right? So that's why it's significant, because selling is the norm, buying is the exception away from that norm. Tesla's my second largest holding, but I have zero trust in the board. I wouldn't be surprised if this buy is just a pump so they can sell billions of dollars more. Unfortunately, I have zero. And like, I think this is a fair point, right? Like, the board is there to keep the CEO accountable. That's the job of the board. The board is there to act in the fiduciary responsibility of shareholders and keep the CEO accountable to act in the best interest of shareholders. And then you could very easily argue, and Roy, I'd love to get your take, but you could very easily argue that if you have a company that's stagnating in growth for 6 quarters, the board is supposed to step in and do something about that. If you have a company whose CEO is, making wild political statements, having strong alignments, hurting the brand, hurting the reputation, it's the board's job to step in and handle that situation. Now, you can have hostile boards, you can have very friendly boards to the CEO. And in Tesla's case, I mean, his brother's on the board. It's very friendly to the CEO. But number one. Number two is a lot of these folks, they believe in the vision, they believe in the mission. And not only that, but they believe in the execution. Elon, as a CEO, has made every member on the board very, very rich, as well as shareholders who have been holding for a prolonged period of time. So there is an argument to be made if you look at the short term, last year and a half, or last 3 years, I'll even give you, where the stock hasn't really done much, to say, well, the board should have stepped in. But if you zoom out over the last 5 or 10 years, the board has been it's been incredibly lucrative to have Elon as a CEO because of the execution that's baked in. So, I think it's short-term pain for long-term gain if you're willing to see that through and if you actually believe in that mission statement. If you don't, and you're like, hey, man, I don't know how many more quarters I'm going to give this for the revenue to stagnate, for the margins to compress, whatever, then you're going to sell out and you're going to say, well, the board should be keeping the CEO accountable. I think both are fair stances. It's just a matter of perspective and time frame.
Yeah, and it's and I agree with that too. Like the board has not been living up to what their role should be. Even with Elon saying that he's going to take a step back from Doge and not be as actively involved. The guy is a genius in many ways, but he's only one person. And Tesla does need a full-time CEO, and they just don't have it right now. And that's not been a good thing for Tesla at all. I myself, like when I am in realist position and the thesis on a stock in my portfolio changes, where I'm like, okay, it's a lot weaker than it was when I was buying this or 12 months ago or whatever. And I was seeing that with Tesla. You and I had talk about how much brand damage was actually done and the role of Elon with Doge and all that stuff months ago. And I was like, you know what? Stock is like 400 something. I'm going to take some off the table. I'm going to lock in some gains. If it goes down, I'll probably, well, it wasn't even like to pivot. I was just like looking and I needed some more money for to round up out a position of mine. I'm like, what am I okay giving up? And it was Tesla. It was not like I'm even going to reduce my position permanently, but that's effectively what's happened. Is I'm like, hey, I've reduced it permanently just because I feel like Tesla is, I'm more neutral on Tesla than anything. Like if I was not in Tesla right now, I wouldn't be getting in right now. I think long term, I think that they'll probably be fine, but like that's the thing I don't like is it's like okay, probably, and you look at what you're paying for a share, yeah, it's not cheap. So there's nothing wrong with revising a position, just saying, you know what, I'm going to take some risk off the table. I'm going to lock in some gains. There's a lot of ways to do that, even without selling, but selling is certainly one of those. And if you do take some gains, you don't have to take all of it. You can say, I'm going to take this risk and cut it in half, or maybe you're up like Jeremy was 1,300%. I mean, he could have just said, you know what, I'm going to take out my initial position, lock in those gains right now, and let the rest run, or half and half or whatever, and that's fine.
Well, okay, so we have to be totally intellectually honest about one thing, and that is the fact that risk is correlated with reward, right? They're intertwined. If you're the person, and like again, I like Jeremy. I consider us friends, colleagues, acquaintances. I've had him on my channel. He's had me on his, and like I have no issue with anybody locking in gains. But at the same time, Tesla was like almost $500 a month ago, and he would have been at 2,000% instead of 1,300. And so I don't think this is. Again, I have not seen why he sold at all, but just from an outsider looking in, this does not seem to me like this stock has just been going up and this person sold just to lock in some gains and whatever. It seems like, hey, it went up and it came back down, or something changed in the fundamental thesis, and that's why they sold. But the thing to understand is, like, I am also neutral on Tesla. It is a hold for me right now. Yes, Paul, you're absolutely right. I do need to check out his video. 1,000%. Here's the thing. I could steel man both sides of that argument for you, Roy. On one side, I can say, yeah, absolutely. There's too much risk associated with Tesla right now because anytime you buy Tesla right now, this week, you're essentially buying into the promise that Elon is saying that they're going to crush it in 26, 27, 28, that FSD and robo-taxis and Optimus are the future that's going to make this the most valuable company in the world. That's what you're buying into, right? If you're buying the stock today. Now, if you're selling the stock today, it's you saying, hey, I gave them 6 quarters of grace period to turn it around. They haven't done anything, and I don't trust that they're going to do it in the next 6 quarters either. Like, both of those stances have a certain level of risk associated with them, and both of those have an amplified level of reward that's associated with that risk. As risk goes up, reward potential goes up, right?
And that risk is proportional to the price of the stock. Like if Tesla was trading at $30 a share, okay, cool. I mean, like that would stink that it had fallen that much, but there wouldn't be that much risk. Like it would still be elevated by some measures, but versus like 300, there's a lot more risk here, especially because it's trading on a narrative. So one other big earnings from last week, and I don't think either of us hold this, but was Google. Google did fine. You know,
Can
they
I
reiterated some things. What's
before
that?
we jump into Google? Can I say something real quick?
I suppose.
I got this comment, just got out of work an hour ago. Tevis will regret he sold his SoFi guarantee. I don't know where this is coming from. I can only imagine it's my sale that I made of SoFi in November at, I think it was $16.50, something like that, $15.50. You guys can go back and you can watch the video when I sold SoFi. It was in the $16 range. And guess what? I've put timestamps up of me rebuying SoFi in the 12s and in the 11s as early as 2 weeks ago. My SoFi position is the largest that it's ever been, including before I had sold shares. So all you guys, like, that's as blunt as I can be while still keeping it PG. Go ahead,
All
Roy.
right.
Let's talk about Google.
So Google was the first, other than Tesla, of the Mag 7 that ended up reporting. And they had good numbers. Like there's nothing wrong with their numbers as well. They reiterated the CapEx spend, which is really good, by the way, for NVIDIA. And they're still down 15% year to date. You don't own Google, right? So a couple of interesting things in that. I don't own Google. I've warmed up. Like this time last year, I was very bearish on Google. And I've warmed up for a couple of reasons. But this earnings call was the first one where they talked a lot about Waymo and Waymo's ramp, and that kind of ties in with where Tesla's going to. That it's going to not scale as rapidly as Tesla is able to potentially, but regulation rather than technology is actually what holds that back potentially. But Waymo is doing quite well. Google, as far as firing on almost all cylinders, yet at the same time, there's massive headwinds, partly because of the macro and also partly because of the DOJ with the antitrust stuff, just saying, hey, Google may have to divest away from their search business or other aspects of their business. So I ended up throwing up this poll, and if you can share it, Tevis. And I'm curious where you guys are on this as well. I found myself usually not starting with Google as far as search, just starting with ChatGPT or Grok or sometimes Gemini, which I know is owned by Google, and starting there probably more than half of the time with searches. And I didn't think that shift was going to happen, at least for a while. A lot of times it's a fact that I'm, in my 40s and I'll remember some obscure historical anecdote or fact. And I know enough of it that I'll recognize the truth once I see it. But you can't search Google that way, but you can go to ChatGPT and say, hey, remind me about the length of the axles on the train and going back to the way that they made the wagons and everything and how that relates to the modern automobile. And it will go down and talk about the whole history and do that impeccably. So a lot of people, and this is a little bit surprising to me, said that they are really skewing more towards LLMs. Now, this doesn't mean that they're not still using search. If you look at their metrics on Google, they're still doing just fine. But there's actually a lot of pressure on the advertising business right now, too. I think Google will be just fine, but I think there's a reason why it's kind of priced cheaply the way it is. So, Tevis, now that you have your mouth full, we'll wait for you to take a big old bite there. There you go. Perfect. All right. So, have you shifted your views on Google at all? And where are you in this search engine versus LLM spectrum?
Okay. I am neutral. I was way more bearish last year. I think they have turned a lot of things around with regards to, first of all, Gemini, if you use it for sheets, it's absolute garbage. It's like a flaming pile of garbage for sheets. Like,
I haven't used it for that.
Don't believe me? Go to Google Sheets and they can use Gemini to build your dashboard or whatever. It's absolutely horrendously trash. It is like the Siri equivalent of Google's, LLM. But Gemini, I think, is great for image generation, generating isometric images where you have a full view of an object. You can see the front and the back. I think that's useful. It's pretty high quality. The point is, if you plot out my sentiment of Google, the lowest was like, Black George Washington, basically, which we had last year, 2 years ago. Right now, it's neutral. I do believe that there's opportunity there, that it's undervalued. Like, I get that whole argument, but at the same time, just I think this is a conversation that we're going to end up revisiting every week or every other week around LLM commoditization. If we do believe that it's going to be commoditized, or if we do believe that there's going to be a clear winner in that space and it's going to be a winner take most type of arena. And if it is a winner take most, is that winner Gemini? TBD. The jury is still out. So for me, I don't own Google. It's a little bit slow for my liking in terms of how it moves. But I'd probably be much more wealthy if I owned Google and I held that for years, as opposed to some other stocks that I hold. But yeah, I think until we get a clear winner in the LLM race, and it is Google, and it is not cannibalistic entirely to their advertising business, then I'm going to be neutral, on Google. They're doing great stuff. I have no real opinion aside from that. It's a very uneducated one.
Yeah, I'm actually really curious on the advertising piece, and maybe that's something that we can discuss in the after hours for whatever we're calling SOFI Weekly these days. It's a space that I don't know enough about. Like, I know how Apple does it, I know how Google does it, I know some of the pressures and headwinds and changes that are happening. But it's interesting just because there's a new player that's getting into advertising that is priced in $0 completely, and people are ignoring that it's even building this platform. It's ignoring who is building it. And they have earnings tomorrow. Do you know who that is, Tevis?
Who has earnings tomorrow?
A company that has earnings tomorrow that is building an advertising business with zero of it priced in, that has somebody with a lot of track record behind it building this out, and that knows exactly where this industry is going. Do you know the company?
I do not.
And I figure most people in the comments don't either. This may get you excited. I know we've talked about it, and Tanner, you have it right. All right, you guys got it right. It's PayPal. Can you throw this up?
I almost threw up Elijah's comment. I'm glad.
No, Elijah, shame on you. Okay, Dr. Mark Gaither. He is a guy, if you're not familiar with him, that built Uber's business for advertising. That's the reason why Uber is in the place it is. I mean, it's not the only reason, but it's a big reason why Uber is in the place that it is because they had no advertising business at all. And now if you go there, like they have a couple of different types of ads. It is a different type of advertising business than PayPal, but he was a lead on that. And they went from no advertising presence at all to over a $1 billion annual run rate at this point. He was also involved with Amazon. Amazon did not have an advertising platform initially. It's one of those very large advertising presence. They're actually the largest in retail advertising at this point. And he was the first person that ended up getting them their first client as well. So Dr. Mark Gaither, just an incredible mind. And he had this interesting post, and he did talk about Google as well. This has been something that's been discussed for a while, Google said that they were going to deprecate their third-party cookies and move away from that. And there's some things that they could do as far as tokenization and some different ideas to retain some of that value without the traceability. But they pivoted. And I think a lot of the concern is they're seeing some headwinds already in the advertising business. And if they made this shift, I mean, their advertisers were screaming at Google saying, do not do this. This is going to mess things up for us. And so Dr. Mark Gaither said the future of advertising is changing, whether Google keeps cookies or not. Most of the internet has already moved on. Safari and Firefox deprecated third-party cookies years ago. Mobile apps never had them. Consumer behavior shifts with the advent of new technology like AI and frictionless checkout. These changes lead to one thing that won't change. People need to pay for what they buy. And that's why I believe that, as James Barrow says, payments are the new cookies. They're deterministic. They reflect real action, not intent or interest, and create value for both the consumers and merchants when they use transparently and responsibly. That's why we're building. And he talks a little bit more about that as well. And so you have this global player that has, between merchants and consumers, over 430 million that will hit, when they post earnings tomorrow morning, a new all-time high for active users. And that's actually previously, when they didn't have a flywheel at all, when they didn't have an ecosystem, when they didn't have an advertising platform, active users are like, it doesn't really matter. Now it actually does. This is something that I noted here. Meaningfully, they'll get $0 of revenue. I mean, it'll be in like hundreds of thousands maybe, but no real revenue yet. How much is guided for this year? None. How much is priced in the stock? I mean, you can look at it. None. What are the odds of this guy that led Uber's entire ad business and built it from scratch and was a significant part of Amazon's as well, fails at this? I think that's close to 0%. And what are the odds of this advertising platform with deterministic outcomes as it relates to advertising not being a significant force in this market, and also for PayPal as far as revenue over the next few years? I also think that's 0%. So this is an earnings as far as PayPal that it's like, it'll be solid. It's not going to blow things out of the water. I'm kind of curious how they guide. I've got a preview on X. I've got a video as well, but like that's just one of many other products as well that they're building that there is absolutely zero priced in. Not everything is going to succeed, but this is one where it's very easy to see the trajectory of this, but it's not going to be a first half thing. So does that get you interested at all, Tevis? Or are you like, PayPal adds to 0, whatever? Obviously, you're not interested.
No. So do I believe it's undervalued? Yes. Do I believe the market is pricing this in? Absolutely not. Do I believe ads is the way to go? Like, of course, they're not only doing ads, they're doing much more. I just think that if you want a company that's in, like, you're playing in an arena where companies are okay. So let me give you an example. Yesterday on Sunday, I built an entire landing page and email capture waitlist form on Windsurf with near zero coding experience. It built out all my folders for me, just all prompt generated. It built out all of my pages. I deployed it to my GitHub and I deployed it through Netlify online, and I had a domain and I had everything going in 2 hours. Zero coding experience. Like, that is the world that you're living in, and you're talking about PayPal's next big move being ads. You know, like I'm sure it's an underserved market. I'm sure they can have arbitrage from it. I'm sure eventually they can make money from it, but it's not going to be something that's going to drive a lot of excitement from the investor base. But their investor base is also people who, you know, are more so the value-oriented investors. This is where I agree with Steve entirely. If PayPal were to issue a dividend, it would align with their investor base because those people are already the ones that are interested in PayPal's direction. But they don't go and buy PayPal because it's not a dividend stock. It is a bad take. It's probably an uneducated take. I understand it. But that's just like you're querying in real time how a 30-something would think about this. And it's just not exciting. The market is competing for my dollar every single day. All of these companies are competing for my wallet, not only as a consumer, but also as an investor. And just PayPal is not, you know, it's not an exciting initiative, man. It's like saying, oh, PayPal is going to expand into insurance now. Okay.
So I think that you're conflating two things. Like, is advertising the most exciting thing ever? No, it's not. You know, they do talk about AI agents. They're shifting everything over to a commerce platform, one tech stack, cloud. You know, they're building digital payment rails on PayUSD. They're monetizing Venmo. They're looking to win, and it's a winner take all. Oh, thank you for donating to Tevis, Chewy. But that's a really nice comment. And I mean it. The comment is worth more than the $5. So thank you so much for that. And Tevis, with this take, he should invest that $5 or whatever the proceeds are in PayPal, just so he has a little bit.
Yes.
But so these things, I think some of them are more exciting than you might, you know, warrant. Like the digital payment rails is pretty exciting, just for what it will actually mean for society, for consumers, and also for PayPal as a business. But I mean, it's like saying that Chipotle, when they first came out, and it's like, yeah, it's not that exciting of a business. They're serving food. Well, look how they compounded. It was an easy layup. It was a product that did very, very well, that got a lot of traction and sold massively. And this right here, like advertising for PayPal, is a layup because a lot of people that are advertising, this is one of the reasons why the Trade Desk has been so successful, is because the ad platforms are not like completely deteriorating, but they're not as strong and compelling as they once were for people that were advertising on these platforms. So as a result, I just saw that as well. Want Tanner in here as well. Yeah, no, but is it like the most exciting thing ever? No. But will it generate them a lot of money over the next 5 years? Absolutely it will. And when the market sees that ramp, and I think that they'll have to see some of that revenue too. I'm not expecting PayPal to do much as a stock really until the second half this year, where I think that it will get back to where it started at the end of the year, probably rise a little bit more depending on the macro. And I still do think that there's a pretty easy track to an all-time high by 2030. But a lot of that's going to be on the later end. It might be like 2027, 2028. Yep. I can't predict the market. Markets tend to be forward-looking, except with PayPal. Every single product that PayPal comes out with, and can be a massive thing. They're like, you know what that's worth? $0. This is, I don't know. It feels like free money to me. Could be opportunity cost, I think, at worst, but that's where I'm at. All right. You're getting a lot of money for PayPal there, brother.
Yeah, I mean, it's $65 a share, and there's going to be a lot of $5 donations if you guys want me to buy one share. Look,
and a lot of people...
I said in the very, very beginning that they can make money from this, and I do believe that they can. And I do believe it could be synergistic in their ecosystem. 1,000%. I'm just saying that PayPal came in hot and heavy with Alex Chris, and they said, we're going to shock the world. We're going to do all of this stuff. We're going to adopt AI. We're going to adopt automation, right? Like the market, so for me to say it's not sexy and that matters in the eyes of investors, like it's not exciting in terms of the growth. There's a reason why PayPal is trading for $65 right now. Like, I don't know what you think that is, or maybe it's the same as what I think that is, but like I can see PayPal as a value stock. And I can probably, like, my rational brain can probably be like, hey, if I buy this and I hold it for the next 5 years, I'll probably make money out of it. But I'm not buying it or holding it because it's not exciting for me. I don't. And so this is what I'm saying. Like, it's not the direction I think that the rest of the tech sector is going in. Like, I would love to hear more about PayPal, for their AI-driven initiatives. PayPal AI-driven financial assistant that proactively, blah, 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 whatever.
Yeah, there's a bunch that they came out with in the last 2 weeks.
Right. And so, like, I think that's the direction that will get investors. And I'm just speculating here, man, because I don't know. I don't know why PayPal is so cheap. It should not be cheap. I agree with you. But I don't know what else to point to of why it's so cheap other than investors are just not excited. Like, the rational side says you can make money, but I don't want to hold it.
Yeah, I mean, that's the thing is a lot of people are saying, it could be a value trap. I don't think it's a value trap. Opportunity cost. It realistically could. Markets can ignore what companies are doing, not indefinitely, but for a long, long time. I do think Heinze is right. Heinze had a comment. He said, PayPal is sexier than SoFi right now. It is. It absolutely is. As far as a stock, it's not, but as far as a company and what they're building, it is.
Maybe. I don't know.
Because, I mean, like, loan platform business, like, so we can think of the advertising platform. It's different because they haven't actually put money on the board yet. Versus loan platform business. We've waxed long, and SoFi has earnings at the same time as PayPal, about the loan platform business and how amazing it is. Is the loan platform business exciting, Tevis, as a technology and as an idea?
I mean,
no. Just you have to say no. It's not. It's boring. Will that make them a ridiculous amount of money that's basically risk-free?
Yeah.
So that's where it's exciting. And that's what I'm saying with advertising is, look, it may not be the most exciting part of segment, but if it prints the money, I don't care. This is great. And it will take a little while. They're not going to print money for the first half. I think it'll be a small amount in the second half. Next year, I expect that it'll probably be ramped up quite nicely based on what I'm seeing, but we'll see.
Yeah, like I agree. Again, I don't want to come off as, talking from the both sides of my mouth and being hypocritical, because I'm sure we've had SoFi podcasts where we've talked about, even in the one where it was with Chris and Steve, we talked about how SoFi's perceived innovation is highly correlated with their B2C products in SoFi Invest. And when you roll out loan platform business, management actively focusing on that is management focusing on way more money for their financials, but Robinhood still gets the lion's share of the love because it has higher perceived innovation because it's doing more on the B2C side. It might be the exact same thing with PayPal, where they're just like, hey, ads is a layup for us. Why not take that money? It's like money you find on the ground. Yes, you might make a lot of money from it, but it's not. And like, you might argue, hey, loan platform business is not that exciting. Sure. And so like, I don't want to take different stances because I like one stock more than the other. Like, it's the same dilemma across both PayPal and SoFi, let's say. I think a lot of people would agree with that analogy. But what I'm saying is, I don't know what the market is looking for when they're judging PayPal. Tesla, super exciting, super high innovation. Stock can fall, it can be crushed in terms of earnings. And Elon can be like, hey, 2026, the robots are looking good. He can show a video from the assembly line and this thing pumps because it's very narrative driven. It's very growth driven, and investors are clearly buying for the future because there's nothing to really love in the financials right now in the immediate short term. People buy different companies for different reasons. If people bought PayPal for the value, you would cease to see the value in it because the stock would go up.
Yeah. So one thing that I'll say too, which was kind of a good point, although you didn't quite make it, was, as far as excitement level, there have been companies that I've researched and I've looked into as far as an investment. I'm like, yeah, I think maybe it's a good thesis, but I'm so bored with that company that I would not spend the time. And I know this about myself, actually doing the due diligence and keeping up with the company like I would need to, especially early on in that investment as I'm going through that company. That would be a mistake for me to invest in, just because I want to have a small, tight portfolio of stocks that I know very well and companies that I know very well. And if I'm like, okay, this is so boring that I'm just not going to take the time to follow earnings calls or listen or see what the news is, that's the wrong investment for me. So for you, PayPal is wrong for two reasons. That, and then also you don't like making money. So and third, you hate stocks that start with a P. Palantir, PayPal, you're like, no, absolutely not. Although Pinterest, so you probably have to sell that one.
I have been reducing my position in that for sure.
There we go.
You know why? Same reason, Roy. Ads. That's how they make money, and so I'm reducing that as well. Yeah, Roy is feisty today.
Yeah, I mean, like, it's the market is not finding PayPal exciting. And to your credit, like the CEO himself, when I asked him, I was like, what do you think the market is looking for? He's like, honestly, I don't know, because we could see very clearly before he was a CEO what they were looking for. And they built that and handled that and done that. And the market's like, yeah, but PayPal sucks. It's like, okay, well, then we'll build these things and do these things. And like, yeah, but PayPal sucks. Sell it anyway. And at some point, that's going to change. Again, they just have to continue to execute. And speaking of execute, well, do we want to talk SoFi at all, or not really? Because we discussed that on Friday.
Do we want to bring Tanner on, or nah?
Nah.
All right, screw it. Sorry, Tanner.
Unless he asks. Like, if he asks, then that's fine. But
only if he asks nicely, though. He can't.
Exactly. And he's on your channel. Like, he's like, yeah, don't give this guy money. He doesn't need money. And he's on there.
I know.
Giving you that his like 2 cents from watching your stream, and not me. Like, come on.
Oh yeah. Now he's not available. It's not you. It's me. I'm just really busy right now. I can't. Yeah. Okay, Tanner. I know all the games.
So SoFi, we'll skip over, guys. If you want to see our thoughts, you go back to whatever we called SoFi Weekly this week. We cover it all there, including earnings predictions as well. Tanner wasn't on, but that's because Tanner sold all of his shares for SoFi, I believe, and shorted it.
Yeah, he wasn't invited. Tanner wasn't invited the other time.
Yeah, that's right. But another big one that you and I do hold that's reporting this week is Robinhood. So this will be your first time,
Second,
if I'm not mistaken. Second for
I
earnings
heard
call?
you guys ask your questions last time. You asked something about interest rates, I think, or international expansion.
International expansion was mine. Yeah. Yeah. I there may be an opportunity for me to ask a question this time too, and I haven't decided what that is yet. So sometimes it's wait and see what the earnings actually look like, and then you'll see the questions there.
And you're just
I,
looking at Texas streams us.
exactly. Yeah, Canadian elections. Yeah, that's right. Yeah, I forgot
Yeah.
that was today. So, but yeah, Robinhood. What do you think as a shareholder, like going into earnings? Any thoughts on Robinhood itself?
Yeah, I mean, I'm excited to see their initiatives that they're going to come out with. I don't have probably as in depth. I haven't had a lot of time to actually break down and go in depth on Robinhood and what my expectations are. But I'm really excited to see from a product perspective more than anything. I think that's the thing that got me into Robinhood in the first place was their product innovations and their pace of innovation from a product perspective just makes me really excited to follow along with what they're rolling out, especially because they include all of that in their financials, like the fact that they rolled out Legend in October, and their expansion to UK and the futures platform, and even more recently, if they're going to have more updates on the product announcement that was a couple weeks ago. When were you guys in San Francisco? A month ago, maybe. So
Yeah, it's felt like a long month, but yes.
and then also I'd like to hear more of what they're seeing from the events markets. I saw that they were doing more on basketball, and I'm wondering how they're seeing that expand over time and what they really want to expand into.
And
So
hockey.
yeah, I mean, like if I had my questions, that's probably what I would ask around is how they're prioritizing these expansions, how they're thinking about these expansions in the grand scheme of things, and really to break out that vision from a 50,000-foot view down to, okay, what are the moving pieces that contribute to those KPIs? And it would be entirely or almost entirely product driven conversation that would be, you know, less focused on the actual AUM growth, less focused on the actual um, subscriber growth, because we can clearly see that those numbers are growing. I don't want to debate whether gold subscribers are going to increase 11% or 9%. I want to debate like, hey, what is the next thing that you guys are seeing on the horizon? Because clearly they have a vision and clearly they're executing against that vision. And I just want more insight into how they see the landscape evolving over time and what exactly they want to capture there. Events
By the way,
contracts was not going to be on my bingo card. That was not something that I was expecting them to expand into. And so what I'm mainly saying, Roy, is, I would basically be asking, okay, what else is not on my bingo card that you guys are thinking about? Not necessarily that you're going to roll out, but more so that you're thinking about so that I can start to conceptualize Robinhood in another vertical that doesn't yet exist. And think about them differently than how the market is thinking about them right now.
yeah, and with Robinhood, like the thing is, there's less of a chance of an outside surprise. There can always be something there, but we know the monthly metrics as far as the trading volumes. There is some revenue outside of that as well. There's a couple of things I'm watching for, and I think that I'll probably save that for whatever we're calling Robinhood Weekly. I think Tech Bros or something like that. That's coming up here in a little over in a half hour with
What
Tanner
happened?
and Amit. Pardon?
No Boys in the Hood?
No, they didn't like that name.
Oh,
So they said Hood is problematic for a number of reasons. So I'm like, well,
yeah.
the
Sorry.
nice thing is I can still put it in the title. It just can't be the name of the show. So I think I did something like Tech Bros and then like Robinhood earnings or something like that. So
Yeah.
yeah. So annoying. But one thing to keep in mind, so I won't go into Robinhood too much other than just saying like we know what they're going to do. They're doing well. And as long as the longer it goes between us actually having a bear market and actually having a crypto winter, like they're just going to continue to do well. And even in those winter times, like they're going to continue to iterate, they're going to expand. They're doing that internationally as well as with products. But one thing to keep in mind, and I remembered this during preparation for SoFi's earnings and also for PayPal's earnings, is that companies are operating under the assumption that the tax credits, which were initially done for corporations under the first Trump administration, are expiring, and unless the big beautiful tax bill that Trump has out there gets passed, or something like that that extends the corporate tax rate, we're going to see a lot of this type of situation where they say, okay, the effective tax rate is going to be, and here it's approximately 25%. It depends on a lot of different factors, but it's going to be meaningfully higher than previously. And so if you look at year over year EPS for SoFi, for Robinhood, for PayPal, and for large cap tech as well, we have Amazon and Microsoft that's coming out. There is some headwind just because they have to make this assumption. And when you jump from 19 or 20% to 25%, that's meaningful. Now, the other factor too, for Robinhood, for SoFi, not so much for PayPal, is that these are companies that have not been profitable that long. And as a result, they were able to get some, realize some tax benefit just because of the previous losses offsetting those present gains that they're not necessarily going to get. That goes in under non-adjusted EPS. And so I don't even think there's going to be that kind of surprise, because we saw SoFi and also Robinhood exercise a lot of those as well. So keep that in mind when you're looking at earnings and EPS specifically. If you're looking for an EPS beat, it may not be as much as you actually expect.
Yeah.
Let's maybe talk macro real quick, and then we can get into questions. There's a couple of things that I thought were really interesting that I shared with you. This was one of those from Bar Chart.
Sure. We also have a bigger audience tonight than normal. I think it was because my having dinner live on stream attracted all the people. They flocked.
I think so.
Yeah.
Thank you guys for being here, by the way. And what we'll do here probably within 10 minutes is we're going to go through your questions. Tevis will go ahead and start tagging some of those as well. And we'll try to do those rapid fire, especially because we do have an end time here within 30 minutes. So we'll try to get to as many of those as possible. I see quite a few there. HIMS is probably something we need to at least mention a little bit too. HIMS and Palantir have earnings next Monday. So this is showing U.S. stocks compared to the rest of the world. And it's off to its worst start since a long time ago, back before you were born, Tevis. Okay, maybe not quite, but pretty close, in 32 years. So this is something that, of course, I think will change once we do have more certainty regarding these tariff policies.
Look at this, Roy. We've conditioned our audience.
Yes. All right. I've got automatic ads already, but I'll go ahead and insert one just for you, June. So if you guys get a double dose of ad back to back, it's June's fault. You can blame her. So send her the bill. This I thought was really good too. Apollo had released a massive 40-page deck. I have not looked through the deck. I just looked through the synopsis from Boring Business on X. It had a lot of very good and interesting charts. So one of those is S&P 500 firms with higher, lower 12-month EPS revisions. In other words, our analysts, when they're looking at companies revising upward and downward for EPS, and we're looking here that almost 50% have been revised downward over the last 12 months, which is something that you can see where it last was in here. The market was not in a good time. Now that doesn't always mean, of course, 2022 we saw some revisions for the downside as well. Doesn't mean that they always get it right, but some of this is tax rates, but a lot of it's macroeconomic uncertainty and also some weakness that we'll see here. Manufacturing survey has been interesting. Manufacturing is a little bit more meaningful right now just because supposedly one of the goals of the tariff policies are to nearshore and reshore manufacturing as well. And we're seeing all of these, whether it's New York, Philadelphia, Dallas, go ahead and tick downwards. 50 is, I believe, what's considered neutral. So we are actually below that. And there's a sharp decline in U.S. corporate capital plans. A lot of that really deals with CEO confidence, which is a little bit later slide. But when, in essence, you're not seeing this with AI specifically. Google reiterated and they said, hey, we're going to buy a lot from NVIDIA. I mean, other companies too, but essentially they said that. I think we'll hear that from Mag 7 as well for the most part. And I think AI spend will continue to be up. The NVIDIAs, the Palantirs, the AVGOs of the world, they're going to be just fine. But the reality is, a lot of CapEx plans really can't be undertaken in this environment just because if you have uncertainty, you don't know what the policy is going to be as far as tariffs, as far as what this trade war will be like. It's hard to build for the long term. And it's usually companies and CEOs just say, you know what, let's wait on this expansion that we're planning to do. Let's take a step back. And so we see, a lot of other bearish news too. We see the manufacturing survey prices paid. This is versus the PCE. It continues to tick up, so we'll probably see the PCE actually continue to rise. ISM manufacturing PMI, we see that that's also ticking up as well. U.S. trucking sales have been dropping. That's usually one of those leading indicators of a recession, although it's not always the case. You can see some exceptions here where there's some temporary weakness. CEO confidence is declining. Container shipping count departures from China, and some of this could be rectified really quite quickly. Part of this is too, you can see a lot of front running here, so I wouldn't worry too much about this one just because people saw a need to do that in before tariffs hit, and so this is a little bit of normalization. If you expect some front running, you expect some weakness on the other side. Freight rates falling, sentiment falling. Consumer sentiment just kind of showing what people are actually thinking. And that does have an influence on what people actually spend. Unemployment expectations are up. There's a lot. I won't go through all of this. You guys can look it up. Are we doomed, Tevis?
The amount of times that we've been doomed and somehow miraculously, like, have you ever seen those memes where it's like, when the news reports on another once in a lifetime event, and it's like the third one this year. I mean, it's sort of like that, man. I don't know.
Yeah.
So
I think a lot of this is noise at this point. It's too much to read. There is some real concern that tariffs will do some long-term structural damage to a lot of different facets and a lot of different companies. I don't think that we're at that point yet where these are reversible. I've been frustrated, with this uncertainty and with the policies, the way that they've been implemented. Maybe it's all a negotiation tactic. Hopefully it is. There's a potential for further downside. And as a result, I've hedged some of my position. And honestly, with hedges, if my hedges go to zero, I'm a happy man because it means that the things are really good in the market. So, but I think long term we're going to be just fine. That this may take a little while to play out, but we've been through that. If you look at any of those charts, you can see previous times of weakness in every single one of those numbers, and yet you can see the long term trajectory of the bull market. Myself, I don't try to time things. I do take some off the table. I do hedge occasionally when I feel like it's appropriate. It helps me sleep at night. But I mean, I'm over 90% fully invested. I'm like 90, 92, 93. So it's not like I'm bearish or shorting companies or thinking that it's all going to, get cut in half over this next year. That said, question.
Yeah, maybe we start here.
Over the next 6 months, I think that we probably will be range bound. I do think that we'll probably come close to retesting where the previous low was on the S&P 500, the local low, not the all-time low, which would make no sense. We've narrowly dodged the bear market, and I don't think that the fall will be quite as abrupt. I really appreciate that, James. That's very nice. That's very kind. But I don't think that we're going to see a all-time high on the market, barring things getting resolved and rectified here over in the next month. I think if that happens, then we'll see an all-time high, very likely by the end of the year. But it's going to take time to recover. They usually when you have these pullbacks, people talk about a V-shaped recovery or recessionary pullback or whatever it is. But you look at how long it took to come out of that low from 2022 and early 2023 and actually hit the new all-time high. It took a lot longer than it did when it was falling. And it's the same thing here with tariff policies. We do see on good news that the market does rally and rip up higher, but it's going to be a little while. So I would say short term, I'm not optimistic. I think we'll probably trade in a range between a little bit higher from here and the previous low. I don't think we'll break underneath that, barring just things falling apart completely. I'd love to be surprised. But yeah, long term, all that does is it gives me a cheaper price to buy some companies that I love, and I don't mind that.
Dude, I'm not like I'm already tired enough. I'm not going to do a 3-hour stream with you guys tonight and go from one pod to another. But let's take a look at. And first, if this does happen, I would need the invitation to formally come from Tanner. I will accept it under no other circumstance.
Oh,
okay.
We'll have to have you on sometime, though, for sure.
First question. This was 2 minutes into our stream. How do you think the effects of AI and robotics long term will have on the economy if AI takes over a vast amount of human jobs? Won't this create massive amounts of unemployment? This is a great question to be asking 2 minutes in. Roy, do you want to tackle it first? But by the way, this is the type of stuff we have on our after hours episodes. This is like almost.
I think we've covered this
exclusively what we talked about. We have covered this exact topic in like a 45-minute episode in the after hours. But Roy, maybe you can take a quick stab.
Yeah, like real quick. I think that it will cost jobs. Like maybe not as many jobs at first, especially as people expect, but there will be some. There will be new jobs. I think that there will actually be fewer newer jobs that are created from these technologies, at least initially, than that are lost. So there will be a wave of disruption. I do fear that there's going to be a chance that we have to go to is it UBI? For some reason, my brain is. And I don't think that's great for society. I don't think that's great for people, but it may be a necessary step. And I'm not in favor of it at all. But if it's necessary, just because there's so much able to be manufactured and done with AI and robotics that we can actually, like, this is one of the frustrating things, not to go because we have limited time. With the manufacturing thrust that Trump wants America to have, like the reality is that can come through robotics and AI. It's a little bit early right now, but 5 years from now, I think that's realistic where we can really see a lot of ramp in manufacturing here in the United States, just because the cost of human labor is not as significant. Now, there are other aspects of doing business here in the United States that can be more expensive than overseas. But I feel like that the opportunity was there instead to prepare for that with building of infrastructure, especially electrical. The electrical grid really needs a lot of ramp for individuals, for a lot of products that are out there, but also for manufacturing. And instead, he did it this way of like silly things, like even before he was a president, saying that basically he's siding with the trade union, the longshoremen, trying to stop any manufacturing. It's like any automation and stuff. It's like, oh man, this is really regressive. So that said, back to your comment, it will impact people. People will lose jobs, but it should create enough opportunity as far as money that there's going to be plenty to give folks that aren't able to find employment or meaningful employment. I don't think it's a great scenario, but overall, like it's long-term good, even though some people will get hurt.
Yeah, I think I agree widely with Roy's stance on it. It's going to be net positive for innovation, but a lot of displacement in the workforce. And you saw the exact same thing like when the Industrial Revolution hit. The dynamics of what were the major verticals employing people vastly changed afterwards, and it moved from agriculture to automation. And you're going to have a similar shift here to a larger degree. I do think that executives and a lot of the people that I talk to right now are either decision makers at tech companies or they're just executives at tech companies. And the scary part, Roy, is that I probably shouldn't say this on the pod, but almost all of them are optimizing for OpEx. Almost all of them are saying not how can I do 10x the amount of sales. They're saying how can I do the current amount of sales with 1/10 the employee base using AI and automation, and like scaling from there. But just to start, they're saying how can I abstract away a lot of my rote manual repetitive tasks of the lowest contributors in my company that are not very high performant and have their own requests, demands, they get sick, they go on vacation, whatever. So I think that stance is shared across the entirety of not only tech, but all executives are asking this question. And in the immediate medium term, you're going to see a lot of people being laid off as a result of their job being automated away, especially as AI gets better. Now, the flip side I will say is I think AI is a supercharger to the gig economy, because if I can, with limited to no coding experience at all, build my own, website in a matter of hours just by messing around with Windsurf and prompting it on one night. Imagine what I can do if I'm just a little bit more adept, and I can do so much more, and I can empower myself to, if I have an idea, I don't need a technical team anymore. I have all the answers there. It's a similar empowerment to what the internet did for distributing equally all the education across people. Like, you had brokers before for investing in stocks. You had all of these people who are professionals. And now everybody on the Robinhood app just buys and sells their own stocks and does their own due diligence, because the internet has unlocked innovations like that. I think AI is going to be the same, but from an enterprise level, from an entrepreneurship level. But yeah, I agree with you, Roy. Like, on aggregate, you're going to lose more jobs than you add.
Yeah, and it's going to be front loaded too. Like, some of the jobs that'll be added will be added a little bit later than jobs that are that are lost too. So let's go rapid fire. I'll try to answer in 1 minute left.
Roblox has SoFi sell covered calls for this Friday at $16.50. I have $18 covered calls. So we'll see if it hits. It was at 4 cents today, and my stupid ass decided not to close them. So we'll see what happens.
I did the same.
I convinced my ex-wife to invest $25K in SoFi. Adam King says, I get the idea from you. Thank you, or I'm sorry, depending on how that goes for you. Is my life going to get more difficult? I mean, it depends on how much you trust your ex-wife, I guess, to hold those shares. So I don't know. But I do think that in the short term, it's unpredictable. If she holds them for several years, then I think she'll be fine. Not financial advice. I am not affiliated with SoFi, and I agree with Ivan's comment here. Why do you really care, my friend?
He might be looking for SoFi to really recover well, in which case she might be his ex-wife.
Yeah, ex-wife who doesn't call me for anything. Can y'all talk about SoFi and HIM's earnings and y'all's thoughts? Yeah, I think SoFi, we're going to cover it tomorrow morning. Please be on this channel, 7 a.m., bright and early. Bring your coffee, bring your donuts, bring your butts in the seat to listen to SoFi. We're going to be breaking down the earnings. So I'm going to hold off on the SoFi one because you're going to hear it tomorrow, Charlie, when you wake up. And for HIM's earnings, I mean, next Monday, I think they're going to be good. There's a bunch of other HIM's questions that I want to get to. So I'll bundle that all in here. I don't think we're going to be streaming HIM's next week because Roy, I think, has Palantir on the same day.
Yeah, that's a
problem. And I have an office job on Monday. So unfortunately, I can't do that, prior to 5 p.m.
Yeah. Like 50% of my portfolio is Palantir. So that one wins against any other company if they're reporting at the same time. I do want to say on HIM's earnings, I think that this is the least important earnings of the year for HIM's. Just because they still have the GLP-1 revenue. We'll get some meaningful read on a couple of products. I think oral weight loss is going to be the most important right there. The comments, the questions, I think that's going to be more important. But really, Q2 is going to be the most significant for HIM's. And so as long as I don't see any huge surprises, I think it'll just be a typical beat and raise, or maybe not even a raise in this environment. It's the least important. All more important, but it's already expected to beat there.
So I would agree with that halfway. I would say that this is important for HIM's because this is going to set the tone for what their full year weight loss segment revenue is going to be. If the GLP-1 revenue comes in very, very strong above what the street was expecting, then the full year weight loss segment is going to beat. And so because this is the last quarter that they can sell GLP-1s, or that they can do it en masse, it's going to be important because if this is a miss, then it's going to adjust the street's entire expectation for the full year because this is now going away.
On HIM's valuation, short interest, it's risky, it's reckless. Valuation, I think it's cheap here.
Yeah.
There may be further downside. Like, it's a very volatile stock. It can move up 10 or percent or down 10% in a day for absolutely no reason. But I think that they'll go Heat. No. Yeah, they Miami, poor.
I didn't bet on
Poor
Miami,
way
but
to end.
holy.
Yeah, that's crazy. But they do spend a lot of marketing, but their marketing expense per revenue is going down. They're a lot more than GLP-1s. Like, that was just a sugar rush of revenue. Could cause some headwinds. It will cause some headwinds this year. But look at the way that they're scaling. Like, they are a company that executes and executes very well. So long term, like, this is the load zone, I think.
Yep. Quick question: 100 men or one gorilla? Who's winning?
100 man.
Yeah, I would agree with that. 100 is a huge number, guys. But so here's the thing: if it's 100 like fighting age men in relatively good shape or okay shape, I would say 100 men. If it's like a sample size of a random assortment of 100 men, like young men, old men, fat men, healthy men, whatever, it's going to be the gorilla. A gorilla has the power of like 10 men. It's like 1,000 psi or something. You're going to get screwed if it's 100 unhealthy men. But if it's like 100 like Spartan built, six-pack shredded, if it's 100 Elijahs, then I'll take the 100 men. All right.
What about Heinz's question there from 918? One gorilla or 100 emits?
The gorilla. I'm going with the gorilla on that one. Sorry, Amit.
I'll have to take the gorilla too. Amit's not a big guy. He's a great guy, but he's not a big guy.
Why did Heinz put me on the spot like that? Okay, so thank you for that one. I don't know why that captured the internet's attention, but that was all the memes I was seeing this morning. Okay, does insider buying $1 million worth of Tesla excite the street? Dom, go back to when we were talking about Tesla earlier in this episode. We did like a full segment on this exact piece of news. Doesn't Canada have elections today? Yes, they do. And the tallying has just started in the East Coast. So we'll see by tomorrow who ends up winning that election. Did either of you catch the Shkreli pod? I did not. It's on the list. Roy recommended it. So I'll definitely have to take a look. Roy, did you catch it?
Yeah, I finished watching all of it on my commute home, just listening to it. And, you may not like Martin Shkreli. Like, there's things that he's done that's just deplorable, just to be honest. But he is brilliant, and he's very good in this field. Like, he made a name for himself being Pharma Bro. So well worth a listen. And it's interesting. Like, he actually draws parallels between, to an extent, Palantir, Google, and HIMS for some very interesting reasons. And just neat to see also like his mindset, because he is a short seller. He is long on HIMS, and also Palantir, by the way. But why he is long, and also what he's thinking, like the short thesis actually is. So well worth a watch. Fresh horses, we ride.
Fresh horses tomorrow. Thoughts on the Pelosi Act? I thought this was kind of funny that they named it that for Roy because he's a citizen. Thanks, Ivan, for rubbing that one in my face.
I mean, like I'm in favor of, like, the current setup is ridiculous and it shouldn't be done. I do think that Senate and public figures should be invested in the United States, and I think that should come through ETFs, and there should be some rules and regulation behind it. So, but yeah, current setup is just ridiculous. I don't think Pelosi herself is like the best stock trader of all time. It's just because of the insider knowledge, which is just wrong and immoral. But like going the other extreme where you just can't trade anything. So, but I love the name of the act. I love it.
Yeah, that's the best part about it, probably. All right, Roy, this is another one for you by Trey and Jewel B. Bremer.
Yes, I do. I'm an options seller, and both puts and calls. So in this environment, like, this has been a dream scenario, honestly, for option sellers. It was frustrating when everything just kept moving up, because I'd covered calls and it's like, dude, they're getting deeper and deeper in the money. This is not great. And at some point, like with HIMS, I'm like, okay, it's at $70. My shares were like 50 or 55 or whatever. I'm like, I will let them go there. That's fine. It shouldn't be that high. And but yeah, I love selling options, and there's some risk to it. You will cap your gains at times, but you also make money when nobody else is.
Tevis, does Tevis think international buying of U.S. products will ever get back? Yeah, like, I mean, look, man, if I'm invested in the market for the long term, I have to be default optimist in the state of the world being better tomorrow than it is today. I do think that they're going to go back to what they used to be and more, but it really depends on how much pain we have to endure between now and then from a tariff situation or from like a, competition of egos, let's say. I think that it might not go back to what it used to be tomorrow or next month or next year, but it will go back eventually because the economy just keeps growing, right? And I think that trend has held for like 100 years. I don't think it's gonna. I don't think it's gonna plateau until birth rates significantly start collapsing. In which case, you're gonna have fewer consumers, and you're gonna have fewer producers of things, and the economy is gonna shrink. But I don't think that's going to happen for the next while. These guys ever show their own portfolios? It's pinned on both of our X accounts. So it's pinned on mine. It's pinned on Roy's, I believe, as well.
I put the Alex Chris interview up as a pin, but yeah, no, I once a quarter or so I'll share my portfolio. But it's like half Palantir. I've got 8 total stocks, so yeah.
Okay, let's take a look at some other questions. And I know Roy has to go in like 2 minutes, 3 minutes, 5 minutes.
5.
How excited am I with Hood? Will you see it being bigger than my SOFI position? I would say that I need to significantly do more homework in Hood for it to be even close to my SOFI position. Hood is like tiny, tiny, tiny compared to SOFI right now. It's like one 1/100th almost of my SOFI position. SOFI is a gigantic chunk of my portfolio. I think it's like close to 40% almost. It's insane. So I'm not against building Hood, but to say Hood is going to be bigger than SOFI, something would fundamentally need to change in how I view both of those positions. Why are you invested in DraftKings since you bet UFC? I'm not invested in, or why are you not invested? I don't invest in DraftKings. I do bet the UFC. The reason I don't invest in DraftKings is because I use BetMGM, I use FanDuel, I use DraftKings interchangeably depending on the promotions. And I think that to some degree is way more commoditized than a broker would be because there's way less sunk cost. I can just, put $50 in one weekend or something in one or the other, depending on what deals are giving me. So the stickiness is far less. Favorite Canadian company, Shopify. I answered this question. Is there a chance the West leaves Canada to join USA? I think if Carney wins, the West is Alberta seriously going to start to waver. Who did you vote for? I'm not answering that, but if you don't know, you probably haven't been a viewer of the channel for long enough.
Chewy's comment 924. How long am I hanging on my PayPal if they don't perform? What if they don't? If sooner this week, are you pivoting? I mean, yeah, like if a company is not performing well, and I think PayPal as a company is, look at the bottom line, they're doing exactly what they're aimed for, and actually even a little bit better. So stock has not acted like that at all. But if that changes and they start missing on promises and retracing some things, I've not been universally happy with everything that PayPal has done, but it's like 95%. The stock's been lousy, but the company's been good. So, it's a long-term play for me. So and it's, looking out towards 2030 and what they're building. So I'm going to hold. And if the thesis changes, that's when I'll shift. Now, I did take some PayPal shares off the table, like I did with almost every position that I had, except for Palantir and Robinhood. When the market was falling, any 2026 leap that I had, I'm like, you know what? I'm just going to go ahead and lock in those gains or losses as they are. I even took some shares off for a couple of companies where I just didn't have any leaps because I recognized the need. I saw very clearly that the market was likely to fall further, and it did. And I recognized the need to raise a little bit of cash, even though it was a little bit later than I would have liked. My hedge was not as big as I wanted it to be. So, but yeah, otherwise, like I'm just going to go on and let them continue to execute and trust the process. Yes, I do. It's smaller position. It's roughly been not just because of price action, but number of shares has been cut in half from the beginning of the year for me, though.
Yep. Since Manuel sold isn't holding Hims anymore, are you going to stream Hims earnings with? Who are you going to stream earning? I would do it with Roy, but he's doing Palantir instead. I'm not sure who I would do it with, honestly. I'll see if Chris Hager DDI is available because I know he holds Hims as well. What do you think would finally prompt SoFi to be re-rated? I think if the tech platform gets a move on in terms of the growth rates, that would probably do it for me. Roy, thoughts?
I think that the likelihood of the tech platform doing that this year is almost zero. What meaningfully would, even this quarter, a lot of companies are being very cautious around guidance. If Noto comes out and rather than the customary beat and raise, if he's like, we're going to raise, but we're going to put a lot of our chips in and just say, this is what we're doing for the rest of the year. And they're raising meaningfully more in the face of the macroeconomic weakness and the uncertainty that other companies have. That sends massive signals. And we will see Tevis's $18 SoFi get blown up. But realistically, I don't think that's going to happen.
I hope it does.
It'll be $11.
I hope it does for you because I hold a bunch of SoFi that I'm not selling against. And
yeah.
What's your price average on SoFi? I can check for you if you want me to, really. But I've been buying in the teens, so I've been averaging up quite a bit. I think my average is like $9 something, $9.30. Roy, do you know yours?
I think it's 7 something.
Do you? I'm not answering this question, Ivan. Good try. I'm not on Hims yet, Roy, but can you talk about the total addressable market potential?
It's more than just telehealth, but like look at telehealth. There's different figures that are out there. It's a distributor. It's not a pharmaceutical company, like in the sense that it's coming up with all these cures and everything, but they kill with absolute distribution. And I think that they will continue to do so. They tend to know, and this is one of the things that's really good with them, is what the next big thing is going to be, and they build that way. That's one of the reasons why they were even in GLP-1s to begin with, because compounding was not something that they were doing previously like this. They were doing personalization, but they said, you know what? Let's absolutely go for this. You can see the oral testosterone that's coming out. Like all these products that they have on the radar, they're meaningful. They help build out the moat more. And the nice thing is, and Martin Shkreli actually had this point, I thought it was very good, is you can have enough like T-shirts, you can have enough cars, you can have enough Celsius beverages. You can't have enough health. It's one of those things that people, if they have money, if they have means, if they have access to it, like there's a lot of things where people will say, you know what, I've been losing hair and I need to look at getting something that maybe it'll help with that. And they look at the price tag, it's like $50 a month. People are having good results. They'll get that. And when they're there, they'll be like, okay, actually I'm struggling with weight and exercising and diet is just not doing it. Oh, they got the oral weight loss solution and my libido's down. And so oral testosterone, this is a flywheel that absolutely builds itself. They can lower that marketing spend by quite a bit, but it's a very, very large potential. And it's really just here in the United States right now. It doesn't have to be in the future.
All right. There's a lot of questions still here, but Roy has to go. He is officially late. We have turned Roy into Tanner. Please follow Roy on the Robinhood. What are you guys calling it? Tech Bros podcast. It's on Roy's channel. Everybody from here, go join there right now. And then for tomorrow, 7 a.m., guys, 7 a.m. on this channel, we're covering SoFi. Make sure to be here bright and early, and I will see you all there. Get good sleep tonight, and let's make some money tomorrow morning. Bootleg back next week. See y'all.